What's going on, traders? We got a lot to talk about. I hope everyone enjoyed their 3-day weekend. I most definitely did, but it is time to lock back in because right now I am seeing signs that we could be looking at an upcoming rug pull. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now we are looking at quant data. You guys ask me all the time to go over triple Qs when it comes to quant data, and we are finally here. And if we look right here, we see that institutions, well, hedge fund, whatever you want to call it, has loaded up triple Q puts. All right, this was Friday, April 17th. They were loaded up close to 10 minutes after the closing bell. Yes, you can trade up to 15 minutes after the closing bell, but depending on your broker. And as you guys can see, they loaded up triple Q puts with a strike of 440. Expiration is April 30th, 2025. They were loaded at 444.83, meaning that when the triple Qs was at 44.83, they got into this position, or they opened this position. The quantity is 10,000. They were loaded at the ask, and you can see here that the premium is 8.14 million. Something you should not take lightly. So if you're new to this channel, this simply means that there is potential, or someone is betting on the possibility of the triple Qs heading towards 440, if not much lower than 440. So something you want to pay attention to, something you want to be aware of. It doesn't mean that this has to happen, but with this amount of premium and this amount of quantities, or amount of contracts I should say, you should definitely take this seriously. And so we look at the NASDAQ here, and as you guys can see, we are below a pretty key level. All right, 18,500 was our key level. The NASDAQ managed to close at 18,380, and it looks like we can head much lower. As long as you stay below 18,500, you open up the floodgates towards 18K, 17,900. Now, this is the part where you need to lock in. All right, if the NASDAQ manages to get below 17,900, pack your bags. All right, get ready to sell everything. Sell your house, car, kids, dog, wife, husband, whatever you're into. Sell the cockroaches in your closet. It's going to get domestic. You are very illiquid below 17,900. Meaning, if you get below 17,900, meaning I want to see a break, retest, you are heading as low as 17,200. Lowest you can go is 16,800, between 16,800 16,700. So if you're bearish, this is something you want to see. If you're bullish, this is something you do not want to see. Your bet, if you're bullish, is that these guys right here in this area right here, these bullish wicks all in this area right here, your best bet is for them to step in and push the NASDAQ back above 18,500. If the NASDAQ manages to get above 18,500 and hold, then you are looking at a move towards 18,700, 18,800 more or less. From there, it's really tough to say because you have a lot of turbulence in this area. So this is the part where you probably will want to pay attention to news. You're going to want to look for good news, basically. If you get good news, whether it's tariff news, semiconductor news, I don't know, then you could potentially head above these guys or stop these guys out of their position, and then you'll be heading much higher, all the way towards about 20K or 19,800 more or less. So that's what I'm looking at for the NASDAQ. ES, same thing. As far as the NASDAQ, you close below a key level here on the ES. We talked about this level before, 5380. As long as you stay below 5380 on the ES, you open up the floodgates towards 5200. That doesn't mean we have to head to 5200. It just means we have space and opportunity to head to 5200. So again, as long as you stay below 5380 on the ES right here, you open up the floodgates all the way to 5200. Once again, this is the part where you need to lock in. 5150 is your key level here. You can say 5140 if you want to play it safe. All right, 5150. If the ES gets below 5150, all right, meaning break, retest, you are very illiquid towards 4,800. Okay, obviously your psych level is going to be in the way, which is 5,000, but you can head as low as 4,800 on the ES. So if you're bullish, you might want to butter up. All right, you might want to butter up worse than a lobster at a New Orleans fish fry. All right, it's going to get very, very bad if you manage to get below 5150 on the ES and hold. All right, now as far as upside go, all right, it goes without saying, 5380. You can say 5400. If you get above 5400, you're heading as high as 5450, more or less, and then you'll be within the range of these guys right here. It's going to be a lot of turbulence. So again, you're going to need some pretty decent news for us to really stop these guys out of their position. And then from there, you're looking at 5500, and then you get very illiquid all the way towards towards 5700. All right, so we're looking at the SPY next. Let's actually look at the triple Qs first. So triple Qs, 446 was your key level here. You managed to close below that. You tried to break above it Friday, right? You saw bulls continue to try to break us higher above it. And if you look closely, you see that bear stepped in over and over. Like, you have tons of bearish wicks up here. I wouldn't say tons, but you got a few significant bearish wicks up here. So bears are very much present in this area. You managed to close below this. So it's looking like as long as triple Q stays below 446, 445 psych level, you open up the floodgates all the way to 435 psych level. All right, and it gets very, very domestic. You manage to get below 440, I mean not 440, 435. If you get below 435, your next key level is 432. You want to see a break and retest, you get below 432, you are very illiquid. Okay, I tell you guys all the time, look to the left. You are very illiquid towards 420. Okay, 420. So what did I just say about quant data? I told you guys, institutions loaded up 440 puts for April 30th. If we look at the charts here, you are below 446. What did I just say? As long as you stay below 446, you open up the floodgates towards 435. Are we doing the math here? Are we doing the math here? All right. So it's looking very, very possible that we can be looking at a move below 440 on the triple Qs. We'll have to wait and see come futures market or come tomorrow's open. All right. So again, if you manage to get below 435, you're looking at 432. You get below 432, you can head as low as 420. You're very illiquid towards 420 on the triple Qs. If you get back above 446, I don't think it really matters until you get above 450 on the triple Qs. We've seen over and over that bulls try to push us above that, and they have continuously failed over and over. So we'll have to wait and see as far as upside. All right. So that's what I'm looking at for the triple Qs. IWM. All right. So IWM, if we look at the weekly time frame for the Russell, all right, if we look at the weekly time frame for the Russell, so this is the part where you really need to lock in. Once again, I'm going to keep telling you to lock in, okay, because I don't want anyone saying I'm making stuff up or anything like that. You got this trend right here, and then you got these guys up here. All right, so this is the weekly time frame, by the way. This is a rising wedge. Okay, rising wedge. All right, you go to the daily time frame here. We zoom in on the IWM. What do you see? You have broken below the rising wedge. Not only did you break below the rising wedge, but you have retested it over and over and over. Okay, over and over. You continue to retest this. Your key level here is about 190, 190.1. You stay below 190.1, you open up the floodgates towards 180 on the IWM. You manage to get below 179 on the Russell. You open up the floodgates towards 170. That is something you do not want to see if you're bullish. If you're bearish, I mean not bullish. Wait, yeah, if you're bearish, this is something you definitely want to see, okay? Now, if you're bullish, you want to see us mount and hold above 190. I would say 191 to be safe, and then you're looking at this gap fill all the way towards 196, okay? So that's what I'm looking at for the Russell, but again, you look at the weekly time frame, it's not looking good. Okay, it's not looking good at all. It looks like you close with a hangman or a reversal hammer pattern here, so I do expect more downside for the Russell. It's also important to note that institutions continue to load up 177 puts for May 16th, so do what you want with that information there. But I mean, you bounced here, you broke below, you're retesting right now. Do the math. All right, so that's what I have for the Russell. Semiconductor ETFs, SMH. So SMH, you close with a dark cloud cover pattern here. You managed to close below 198, which was your key level. You open up the floodgates towards 188, 186. Let's actually go to the daily time frame so I can get a better view here. All right, so as long as you stay below 198 on SMH, you could potentially fill this gap here at around 198, between 198 and 200, but I think it would you just simply wick right back towards the downside, and then you head back towards 188, 187. If you manage to get below 187, you open up the floodgates towards 170s, low 170s. You can head as low as 163. Okay, 163, 161. So it's not looking good for semiconductors. I just don't see any bullish scenario right now when it comes to semiconductors outside of filling that gap. That's all I really see right now. SOXX, SOXX, you have this head and shoulders pattern. You have a shoulder here, head here. You have this massive shoulder here. So far, SOXX is playing out. You are you close back below the weekly 200 MA on SOXX at around, I would say 170. 174 was your key level here. Let's get rid of this. 174 was your key level here. So it is looking like you are going to head much lower on SOXX. My next key level here is about 150, 145. You are pretty illiquid towards the downside here on SOXX, and I think it goes without saying that semiconductors are going to follow. Now, again, you do have a gap towards the upside here, so I wouldn't be surprised that maybe Monday, okay, this is a big maybe, you simply retest this gap field around 174. You know, bulls get happy. They're like, oh, we're about to, you know, pump. And then boom, you get rug pulled. You get your face whipped off. All that fun stuff. So yeah, it's not looking good for SOXX. Nvidia, you do have a gap towards the upside, but once again, you have closed below a key level on Nvidia, which is 104.5. You can say 105 is your psych level. All right, you go to the weekly time frame on Nvidia. Again, you have this massive rising wedge pattern. You have this dark cloud cover. You can argue this is not a dark cloud cover. I don't think this is 50% of this bullish candle, but if it looks like the pattern, assume that it is until proven otherwise. But you do have a dark cloud cover, which is a bearish pattern. And my next key level for Nvidia, if you manage to get below 100, is 97. You get below 97, you are looking at a move. I'll say 96.5 actually. You are looking at a move towards 92. All right. Now, I will say this much. The measured move for this rising wedge pattern. All right. So all we're going to do is measure the open and close of this. So the measured move for this is all the way towards the 200 weekly MA, which is all the way at about 60. Okay, between 60 and 50. All right. I'm not saying Nvidia is going to hit that low. I'm just saying that it is possible. Okay, it's possible. Now, before you say, oh, Nvidia can't hit that low, it's Nvidia, right? Mind you, pre-split, $50 for Nvidia was 500. Okay, so it's very much possible Nvidia can hit that low. All right, I just want to make that clear. All right, so before we start saying these numbers are impossible, it's very much possible. That is 500 pre-split. So I'm not saying it's going to hit there. I'm just saying it's possible. All right, so $50 between $50 and $60 is the measured move, projected measured move for this rising wedge on Nvidia. All right, again, you stay below 105, you're looking at a move towards 100. You get below 100, you're looking at a move towards 97, 96.5, 92 being the lowest we're looking at least for the short term. We look at the VIX. So I don't have Discord up, but in our Discord, you're just gonna have to trust me, bro. Our Discord bot alerted to us that institutions loaded up 60 calls for the VIX for May 16th. All right, I think it was May 16th or May 21st. Feel free to correct me there if you're in the Discord. But yeah, the VIX, I don't really have much for the VIX as far as heading towards 60. I mean, is it possible? Sure. For now, I'm looking at a move towards 37 to just simply fill this gap. And then from there, like I said in the last video, I don't know what's going to happen. Okay, I don't know what's going to happen. I don't know if the VIX is going to just blow through this or it's just going to simply retest, create a lower high, and then we head lower. All right, so we'll have to wait and see. It's also important to note that you do have a reversal pattern here. This is an inverted hammer pattern. So yeah, very much possible that the VIX pumps towards the upside. Obviously, the market will do the inverse of that, and then we'll have to wait and see. But I'm looking at this gap fill for now. Can it head towards 60? Sure, but I don't see a way for us to head there as of now. Okay, as of now, we'll have to wait and see. If it manages to close above this gap fill, meaning that it does one of these. So let's map this out. If it manages to do this, like boom, boom, then yeah, we're definitely heading towards 60. But for now, we'll just have to wait and see. And that's pretty much all I have for this video. Let me know if you guys got anything from it. What do you guys think heading into this next trading week or the next few trading weeks? Do you think we're bullish? Do you think we're bearish? I've said this multiple times. I don't think the bottom is going to be officially in, at least for, I guess, the short term. I don't think the bottom is going to be in until maybe May, sometime late May or something like that. But for now, I do think we're going to see more downside. We look at the Nasdaq. I don't think I actually did this. Okay, so if we look at the Nasdaq, I mean, you see these massive rising wedge patterns on the weekly time frame. They have yet to play out. The measured move is mostly to the 200 weekly MA. I've talked about this in previous videos where I do think the next drop is going to head towards the 200 weekly MA on a lot of the futures and ETFs. ES, I mean, same thing. I'm expecting a move towards the 200 weekly MA as well. SPY, same thing. You're looking at a move towards 465. Triple Qs, same thing. You have this massive rising wedge on the triple Qs as well. Dark cloud covers forming everywhere. More, you can argue that they're not, but regardless, dark cloud covers. You do have support here, all the way at the 200 MA as well. So that's interesting. But yeah, I do think we're going to see another drop. I think the next drop is going to be the final drop, at least for, I guess, the summertime, and then from there we'll have to wait and see. But again, let me know what you guys think in the comments below. I will make a Tesla video prior to his earnings. They do have earnings Tuesday, so be on the lookout for that. And I'd really appreciate you guys. I hope everyone enjoyed their weekend. I just saw the movie Sinners. 10 out of 10. You gotta go see it. All right, you gotta go see it. Okay, you definitely gotta go see it. If you don't see it in IMAX, you are cheating yourself. All right, so definitely go see that movie. 10 out of 10. Okay, until the next video, traders. Have a good one.